First thing I'm going to show is the texting. As far as getting text alerts, we have switched off the old system and we are now running on the new system. And so, if you're not getting the text alerts, it's probably because you're not on the new system just yet. Okay, so to access it, you just come up here to the top. Okay, here it says Welcome Jeff, obviously with my account, right? And just go to My Account. Okay, and you come in and it'll give your info, and you just come here to edit account and profile down here below. And then this area here, you can't change your username, but you can change your password. You can change the email address you would like things to go to, and here you can add text alerts. So you put the number that you need for the text alert. So you put, for me, the area code and phone number there. If you're in the U.S. and Canada, that's all you need. Okay, if you're international, you do need to have a country code here, and to find that, all you have to do is click this link, and it will give you the country code there. Okay. There's also over here a profile, and this is completely optional. We don't have any expectations of everyone filling this out. We know this is not information that everybody's comfortable sharing. We simply put it here on an optional basis and really to understand who our customers are, to understand, what they're looking at, what their needs are, education, time trading, and it just kind of helps us understand, our customers a little bit better and be able to make the product better for them. Okay. Yeah, no, AK, no data mining. No, in fact, if you kind of go through our terms and conditions, we have a strict privacy policy, where we do not share anything at all, and that's something we take very serious. So yeah, no, I know you're messing, but no, just for those that are wondering here, yeah. Um, so anyway, and in fact, when we pull this data, we don't even pull it with an individual's name. It just pulls and shows us, okay, this is how many people have filled it out. This is the graph showing what the trading experience is. We have 10% that have 2 to 5 years, and so it just kind of gives us the big picture there. Okay. All right, so to add your text alerts, that's where you can go there. Also here on the live trade seat, to access recorded videos, okay, just up top here to the video library, okay, just up top to the video library, you can click on that, okay, and just click there, and you can access past videos, and go and see those. There will be some further organization coming to this video library. There will be search functions here where you can search by topic, where you can put in like Goldman Sachs. It'll bring up all the videos that are talking about Goldman Sachs. It will have that coming forward, coming soon with that. But um, so far, yeah, this is what's there, and it has the bulk here. Also, the closing notes and morning notes that go out via email and text, they are now up here, where you can access those, the wrap ups, and see those in here. Okay, the videos for the Vibe and the Trend Writer and the 100K challenge, they are all on YouTube right now. In fact, Jared just posted those onto YouTube. If you want to see those, they will only be on YouTube for a little bit. And just in YouTube, if you just go to Trader Minute, okay, it'll bring up the Vibe template, the 100K challenge, and the Trend Rider template that you can go through. For those of you who are new or wanted to see those videos, they're there. They'll be on there for another couple days until they're on the website. They will be on the site very shortly, and they'll be in that top section above the chat window by video library and notes. So you can access them there at YouTube there. Okay. Max, yeah, there you go. Okay. Alrighty. Let's take a look. There's some questions here. It looks like XLE and Goldman. Let's take a look at IBB and HGG. Let's go start with the IBB and HGG. Um, here we're talking about biotech shares, and we're talking about a double top essentially, kind of coming in here, where you kind of get this sharp sell. You get this rebound, and now you get another sharp sell. Traditionally, with these double tops, you basically need the low between the tops to break for it to be a confirmed bearish signal. Okay. When I look at something like this, I understand, it'll be quite volatile overall, okay, with the IBB, but I'll pull it up on a weekly basis here, and let me just alter this chart a little bit. But on a weekly chart, and you just see the massive run up here, and as long as it trades below the 7-hour or 7-week moving average, with the MACD negative, I would take more of a bearish standpoint on it. I will take, I would rather be a seller of rallies than a buyer of dips. Obviously, Steve, you know me, I'm not a huge follower of all the biotech, but we've seen some major erosion happening in there. Not that valuations are absolutely ridiculous, but every bull market kind of runs out a little bit. Do I think this has to be a major top? No, it doesn't have to be. But as long as it trades below this 7-week moving average, the risk involved in being long these biotech shares or the IBB is very high. Okay, is very, very high here. Okay. So if we go to HGG, which is, I'm assuming, a biotech. This is a new ticker being thrown at me here. Well, let me go double check. Steve, you probably know better than I. HGG. No, electronic store. Oh, this is H. Greg. Okay. Sorry, didn't register here. Okay, missed their earnings here earlier this week, according to Zacks at least. 12 cents. Whenever I'm running through numbers like this, I'm not looking at what they did. I want to see what their projections are, what they did as far as projecting forward. Doesn't look like they have that on here as far as the growth. So just strictly from a fundamental standpoint, one of the things that kind of a real basic fundamental measure to look at and say, hey, can a stock go lower or is it getting about fairly valued? Take this forward PE, and if that is greater than next year's growth rate, that stock can fall quite a ways. Okay, it can drop quite a bit. If the next year's growth rate's greater than the forward PE, you're talking about something that still has some pretty good value and could rise significantly. One of the things that's happened in the market recently is a lot of these forward PEs are greater than the growth rates. That's a little bit of a dangerous setup there. So with Greg, just fundamentally from these two basic, very remedial numbers, we're looking at something that definitely has downside potential. Obviously, as you mentioned here, there's a strong head and shoulders pattern here. With basically perfect mark here on 17. Okay, we have our shoulder, our head, and our shoulder. Okay, action. We get the breakdown. So the initial breakdown we would expect to be the size of the last shoulder. So from 19 to 17. So we would expect it to break down from 17 to 15. Check, done. We now get the snapback rally. We would expect for the next downturn, okay, the next leg lower to be the size of the head here. So from 20 and a half down to 17, so $3.50. So from 17, you're looking down here around 13.50 as a final price target for Greg. Isn't that coincidental? Right down to the May lows, where they missed earnings last time apparently. Okay, so that's as from a technical standpoint, that's what I would expect. 17 and a half would be the stop area. 17 and a half to 17 in that would be your stop area. If you're looking to kind of go after it right here, that's kind of what I would use, and then a 13 and a half price target. Sorry, I'm quickly going through the chats here. Okay. All right, there we go. Okay. Um, All right, let's take a look at the XLE and Goldman. I've gotten some emails that people are still in them. XLE, because of the options that it. Oh yeah, Steve, sure. Yeah, 17 would be ideal. On that, I think if it fails here and starts to go, your chances of hitting 13 and a half are much greater if it never gets back up to 17. Um, that's probably what you're looking at. But XLE, one thing you have to take into account here with XLE is that, yes, we've seen bearish action at 87. We've seen bullish action at 86. Okay. But all in all here, we're creating a flag and pennant pattern. Okay. I mean, we're creating a pretty bullish pattern overall that if we start to break out above 87 and a half, you're looking at going into the low 90s, 92 area as a price target based on this pattern. Okay, so there is a bullish pattern taking shape here. Now, obviously, we'd need Exxon and Chevron to, really pay off pretty big. But there is a bullish pattern in the mix. But I wouldn't be buying this yet with all these bearish candle patterns also in here and volumes. They favor the bears. I forget who it was, but one of you made the observation that some of the components are white hot here. The Exxon, the Chevron, pushing up higher here. BP has been on fire. The main components, XLE components, let me show those to you here. What make up the XLE? They changed this website a little bit here. Let me go back here. I just do a Google search for XLE components and it gives something. But Exxon, Chevron, the top two, and so they have been the ones that have really held it up. We've seen weakness come in on Halliburton, on some of these others, even Conoco, and push lower. In fact, Schlumberger here. Let me show you Schlumberger. Okay, I mean we've seen a little bit of weakening even in that, but the Exxon and the Chevron have really been what have been taking it higher. And with those doing so well right here, this is one of the reasons I say I may go with, if I'm looking to short energy, I'd probably rotate into the OIH a little bit instead of the XLE from this point because of some of the changes that have happened with Exxon and Chevron. Here you can look at the OIH. Here are the components. Schlumberger, okay, number one, 21%. You have Halliburton, NOV, Seadrill, BHI. This gets much more into the drillers, much more into the offshore rigs. In fact, one of the stocks that I've just been watching, I've not been able to pull the trigger on a trade here, is rig. I think if rig gets up into the 51, 52 area, it would set up beautifully as a short. Not quite sure it'll get there. Okay, but that's kind of where I'd kind of like to see there. Okay. Now, when we're looking here with energy, we're also looking at oil, and a lot of people want to say, well, oil's up, energy stocks have to go up, or oil's down, energy stocks go down. But the way oil really works, the way these energy stocks really trade with oil is they're looking at what the overall price of oil during a certain time period is. So for July, August, September, I mean, oil was above $100. These companies were starting to get comfortable with production levels that represented production levels above 100%, above $100 for oil. But as the price of oil goes down, what happens to production? Okay, well, production, you tend to lessen your production because for a company, let's say it cost them $80 to produce a $100 barrel of oil. Okay, well, they're making 20 bucks on that. But what if oil comes down to 90 bucks? Well, they're only making 10 bucks on that. So they may not drill nearly as much because it's not as marginally profitable for them to do so. So the whole idea with these energy stocks isn't where does oil go, it's where does oil stay here? Where does it stabilize? Does it stabilize below 90? Does it end up stabilizing in the upper 90s, or does it snap back above 100 and stay above 100 here, and that be the norm? And if we see oil snap back above 100 and that be the norm, that's what would propel these oil stocks up into up further and to see another 20% on many of these stocks as far as price appreciation. If they stay here, if oil prices stay here in the mid 90s, we'll probably see oil stabilize. It'll probably have a 3 to 5% type correction, but overall stabilize. If we see oil start to break below 89, 88, we're going to be talking about a significant correction in these oil stocks. And so we'll kind of see where this oil goes as far as USO and trading it. I'd love to get back into this short, but having traded oil, I want to let this bounce first. Now, this probably needs some sort of bounce back up into the 35, 35 and a half area on the USO. But that's what I'd be kind of looking for. But I don't think we'll have a chance to really short it anytime real soon. I don't think that'll happen this week. Okay. Um, okay, let's go take a look here. AIG. Any downside support here on AIG? AIG, this big gap down here, right? Whenever I'm looking at levels of support, okay, on something like this, Cam, when I'm looking at levels of support, yeah, we have the various price levels. In fact, let me annotate this. Okay, we have different price levels at a bunch of these different spots that we could call support. But what really creates support is a fundamental event. And so we typically will see those fundamental events happen on volume. So, right here around 48, we have a little bit of volume, not a ton. So is it a real strong support level? Not really. So when looking at support, I want to go first back to the bigger volume and say, okay, something happened in here. Okay, obviously probably in an earnings report, right? Something happened in here, gapped up, came down and found support here around 46. Okay, this was kind of where it faded after that big volume and buyers came in. So 46 would be the primary support for AIG here. Okay, based on that type of volume here, where the next support, we had some pretty good volumes back here in June, so we're probably looking somewhere around 43 as far as your support and resistance range. Okay. Depending on how bearish you are, you can kind of look at this a little longer term and take AIG, pop up a weekly chart on it, and start throwing retracements on here and saying, all right, where does this retrace to, and things like that. Um, there are bears that'll argue with you that AIG still isn't you know, worth the paper it's printed on from a fundamental standpoint. In fact, there are some bearish analyst out there who would argue that if the economy goes into another recession, AIG will go bankrupt, that they will roll over and die. You know, not quite sure that they'll do that with all the government backing, but you know, there's some really heated arguments on it. For this year, 2013, AIG has been a favorite of the hedge funds. Hedge funds have really liked AIG. They've piled into AIG for much of this year, which also kind of makes me suspect that on this pullback, on this gap down, there's going to be a lot of hedge funds needing to get out, and so that this is something that can push or exaggerate below support levels. Okay. Anyway, those are my thoughts there on AIG there, KM. Steve, what's the quickest way to see sectors, symbols, and their components? I need to rotate out of biotech. LOL. Yeah, I just, well, here, let me shrink this here so you can see the top of the page. But um, all I do is, let's see here. There we go. Can we see that? You see up here where it says OIH components in my little Google bar? I just put, I put IBB components. It'll just pull up either the iShares. Most of the time, ETF Investment Outlook will give it to you, but the easiest one is just the Yahoo Finance, where you just click on that and it'll show you it'll show you the components. For some reason, for this one, it's not. Fund Basics, Performance. And it's not showing it, so I just hit the back button and go click on one of the others. And here we are. So for IBB, we have Gilead, Biogen, Celgene, Amgen, some of the big ones. You see the weightings on them. And you can kind of go through that entire list. But that's what I do. So in regards to your question, is IBB and BBH the same, right? Well, let's go BBH components and just do a quick comparison. So they have Amgen. This isn't giving me percentage breakdowns. Let's see if we can get percentage breakdowns. Same page. Okay, so here we're getting percentage breakdown. So on the BBH, we're getting 11% Gilead, 10% Amgen, 7% Celgene, where here we're getting 8% Gilead, 8% Biogen, 8% Celgene, 8% Amgen. So we have a little bit more balance here on the IBB, where the BBH is a little more top heavy with Gilead, Amgen, and Celgene. Now, subtle differences. Very, very subtle differences. Okay. And you say in the names of the sectors, XLF, XLI, are you, where are you looking for a comprehensive list of these types of ETFs, or are you looking for just finding their components? Okay, you basically have a fund of all these components. Instead, could have bought the BBH. Yeah, yeah. Back in my fund managing days, some people would come to me and they'd say, this is where my money is. I want to see what you guys can do with it, what you guys are going to do with it. And one of the surprises that would happen is they would compare what we were in and look at what they were in. And we would be in 10 to 15 things max at a time. And they'd come over, they'd have 40 to 80. One guy came in with over 100 different holdings of different stocks. And I just looked at him. I said, okay, great, you're diversified, and your broker has you paying all these commissions on each and every one of these different stocks instead of just buying you the market. If you own 100 stocks, just buy the SPY. Save a heck of a lot on commission and don't have to worry about the individual names. And that's one of the advantages to these ETFs. Okay. For the sector spiders, like the XLI and the XLF, these ones that are XL in nature, This is the website here. Let me show it to you. And it's spiders.com. And it's spider spelled, in fact, here, I'll just put it in the chat. Okay, it's spider spelled without the vowels. Okay, and here you can come in and look at the various ETFs. They have the major, the XLI, the XLE, the XLU, the 9 major sector breakdowns here, sector spider, and it'll show you, performance, and it'll show you the different elements to it. And, they've changed this website here in the last year a little bit, but this is a good place for that. AK, oil is so regulated you don't see it breaking down. Yeah, that there's obviously some manipulation, some control that goes on there. The one thing about commodities in general is when they decide to break one way or the other, higher or lower, they can defy logic in even a greater way than any stock can. You think some of these runs on Tesla or something like that are interesting. I mean, some of the runs that will happen in the commodity space can be absolutely incredible. Overall, commodities have been pretty quiet this year. Some gold traders may argue with that, but it's been relatively quiet. But with oil, I was going to get you the let's see if I can find it real quick. The lawsuit here that that came out in regards to the manipulation of oil. Let me see if I can find that real quick here for you. Let me just quick do a Google search here because I'm not finding it on my other screen. Brent oil lawsuit. All right, here we are. So I'll shoot this over to you as well. Take a look. But basically, this is dealing with Brent crude. Okay, so there's different types of crude around the world. The USO is based off of West Texas crude. Brent crude, it can be traded with the BNO, Barry Nancy Oscar. And so here, this lawsuit's alleging basically going after British Petroleum, STL, and Royal Dutch Shell as they conspired with Morgan Stanley and energy traders of Vitol to kind of manipulate the spot prices here in oil. And everybody's known that they're being manipulated for 20, 30, 50 years. Gold market's similar. There's some heavy manipulation, and heck, I mean, you can make some really strong arguments that the broader stock market in general. I mean, we're seeing the Fed manipulate stocks in a way that we've never seen before. And what manipulation is good, what manipulation is bad. Yeah, OPEC has been trying to do it for a long time, right? Talk about a cartel. Well, OPEC is a very interesting entity. No, there's absolute, all kinds of stuff like that going on. Okay, let's take a look here, see if I'm missing anything from the chats that you wanted me to look at here. Okay, doesn't look like it. All right, there we go. Yeah, Max, just watch the weekly OPEX in Apple to see manipulation. Yeah, no. Yeah, I mean, even in Apple, you see it. You absolutely see it. I mean, you have hedge fund managers calling each other, and I mean, I imagine we hear about 1% of it. Okay, we hear probably about 1% of it, but it is what it is, and now I'm not going and trading the market expecting everything to be on the up and up. We basically understand that there's corruption in the system and there's discrepancies in the system, and really that's what allows for some of the trading. So Alrighty, well, I'm going to hop off here for about 5 minutes. I'll be back on Talk Candlesticks, and we'll go from there. Thanks.